Good morning, it's Harvey Jackson from Oilseeds Marketing. Just going to have a quick overview and have a look at some of the weather that could be impacting the market and oilseeds. So first off, as of updated, you got your hazards outlook and you got the rapid onset drought risk, uh, basically in the Delta region. Um, and whether that's going to be a good or bad thing, it could, especially in the farther south, actually speed up harvest. Not to say that that's needed, but here's a broader view, and you can see that there's still high risk of above normal temperatures, in the northern plains U.S., South Calgary, and Saskatchewan, and I would imagine it does flow into Canada a little wee bit, but seeing how the jet stream kind of lines up for that. Um, so your all hazards map actually shows a uh, excessive heat warning, Chicago area and our surrounding, but it doesn't seem to last for very long, as you can see maybe on this map here, with the temperatures actually, changing here. You can see, 97, 100 degrees, and then it kind of slides to the east, and then cools off by the time we get into the end of the week and start cooling off beyond that. So I don't think that the length of time is going to be long enough to actually do a lot of damage. You can see the 0 to 5 here using the GEFS temperature anomaly. It's hitting in that area, but now will it 1 or 2 days of um, high temperatures do that much damage? We'll have to wait and see. But as you go into the 5 to 10 with the same modeling, it builds into the west and into Western Canada as well, and then it creates a bullseye, Saskatchewan and south as well, when you get to 10 to 15, but still warming. So crop progress reports of note, good to excellent does decrease as time goes on in the growing season, because it's a visual thing. As you're driving by, you're starting to see crops start to dry out, and your normal good to excellent trade does go down. So your corn and soybeans going down, uh, and a good setting of pods, and as the corn is maturing, it's moving along pretty good. So harvest for spring wheat of note is at 51%. Data I got from Karen Braun. The Canadian rail decision for all companies seems to have both CN and CP have ended, and uh, because of the legislation for them back to work. Of note, you may want to see this, that they're going to obey the back to work, but they're going to challenge the decision whether it's constitutional. Uh, the way our government is going, who knows? And yet it's an essential thing for Canada to have rail. That is definitely a well-known thing. So let's get into the canola. Um, so as we stand here, canola is up 670, 610. Rapeseed is basically flat. Soybean oil is down uh, zero point 0.2 of a cent of a pound. Palm oil down a little bit. Crude oil is down as well, down below or just at 75.8. Soybeans flat, and then your wheat's down a penny to 2.5 pennies, and the Canadian dollar is still up. Now we're up at the 74.32. Canola. Just looking at the retracement here, and if we were looking at some of this slow stochastics, this could be an upward move in here, and what I would be looking for is now, once we get beyond this level, whether we can get to the 61.8, 606, and then 635 way above there, and the hope would be that we can get back to 681. I'm still a little bit nervous about the StatScan report, maybe adding a little bit of pressure on the market tomorrow, but we'll have to wait and see how that report, what comes about it, whether the market will accept higher yields than what could be out there in the field as of right now. Soybean oil, same actually area of upward movement. Now we're above that 78.6 retracement value, and the hope would be to get it back to 42 cents with the 61.8 retracement value. Palm oil had some really good days. We lost a little bit of momentum here just overnight, but this trend seems to be set in a little bit, and looking for a full recovery back up to the 41.04 ringgit for the Malaysian palm oil. Rapeseed, if we're looking at the the longer term, we're trading at the 61.8 and a possible recovery in here. So I just measured that. So the next area would be to get back up to 462 and a half or better. Soybeans kind of trading along the bottom, but trading above that 10-day moving average. There's possibility that you could say soybeans have maybe created a little bit of a floor here, but as we can see when we get into the wheat, we had the floor for a little while and that just disappeared. Your rapeseed price in Canadian dollars minus the canola has pulled back a little bit. Now that this is possibly a good thing when you get a pullback and you got canola maybe adding better value over the rapeseed price, which is indicative if we were to get down to lower values and like there's many different ways that that spread could actually narrow up, but if it narrows up, it could mean that the canola is actually uh, gaining in value over the European rapeseed. Canadian dollar, as I mentioned earlier, is pretty strong. And I just kind of put in some outside ranges in here. We're basically right dead center in the middle of the range here, but above probably um, areas that traded through in the last few days, and now probably looking at 74 and a half, 74, 75, somewhere in there before it gets to these higher levels. Now, uh, a stronger Canadian dollar doesn't necessarily help the canola price, but hey, canola price going up and Canadian dollar going up, uh, there, you would say that that's a bad relationship, but hey, that just means that canola may be a little bit stronger than you might think. Board crush margin flat for the last few days. We can go as a little higher, but then a year ago, of course, we're almost double the value. So a month ago was even lower. So you've got this middle of the road kind of a trading range on the canola crush margin. And again, every canola crusher has different margins because they probably lock it in at different values and make sales at different values as well. So let's just have a look at the complexes that somewhat drive the market. Here's corn breaking through the last couple of days. It still continue to leak lower. And your milling wheat, which I was looking for some level of support at this 220 value, and now we're getting back to full retracement values back that was made in the early spring. So lost all of the high price to low price here value so far in this current season for milling wheat. And if there was any support there at all, it seems to be gone. You can see that the hard red winter wheat is actually broke through, and as I noted before, we're not even anywhere trading at the 10-day moving average, but breaking through. Here's your spring wheat, and it broke through a few days ago and still continue to have some more downward pressure. Just looking at it a little bit farther, and I just did an extension on retracement values. So the next possible area would be down at 540 for support. We do not want it to get there, but it's all possible. So tomorrow we got our model-based yield coming out, stat scan. So we'll expect that early in the morning. We'll chat later.